Hey, today I want to show you how to pay off debt to qualify for a mortgage. And it's important to understand that a lender typically will want you to not pay off the debt prior to closing, but instead to pay it off at closing. So you don't want to go out and pay off all of your credit card debt before you go talk to a mortgage lender. Maybe the mortgage lender thinks that having the cash in the bank is more valuable than paying down the balance on a credit card. Now, it's going to be case by case because sometimes you're going to want to improve your credit scores by improving your credit balance to limit ratio. So, this is one of the factors in your credit score. But in most cases, the lender's going to tell you to hold off and first come and see them and let them do a calculation. And what we do in lending when we're trying to lower your total debt to income ratio is we're going to take the payments on a credit report and divide it by the balance on the credit report. And by doing that, it's going to give us a percentage. We want to pay off the debts in order to lower your debt ratio, which is your total debt plus your new mortgage payment that we're taking out for you, all added up and divided into your gross income. That's your debt ratio. We want to lower that debt ratio until you become approved by the automated underwriting or the lender's guidelines. Generally, that might be around 45 or 43%. Sometimes it's 49, sometimes it's 56. But whatever the case is, if we're trying to lower this final debt ratio, we call it, you're going to want to pick out the debts with the highest payment to balance ratio. So that's what I did here is I divided the payment by the balance and I got the balance to payment ratio. And I'm just going to go through here and pick out the ones that have the highest number there. So there's one, and there's a 10. Say we're trying to get down to 45. We haven't done it yet, but we've made the most impact on this whole scenario by removing the two balances that have the highest payment to balance ratio. Doesn't matter what the interest rate is. Do not pay attention to the interest rate in this case. You're looking to improve your debt ratio by getting rid of the biggest payment. This is allowing you to use the dollars that you have available to most effectively lower this debt ratio. So every dollar counts in this case, and we don't want to go paying off a debt with a very low balance to debt ratio. In this case, we wouldn't pay off this $1,000 debt just because it's lower than this $3,000 one, because look at that payment to balance ratio. It's 3.5% instead of 2. We want to get rid of this one. So let's pick out the ones. Here's one right there. There's 5%. Get rid of that puppy. And 3.5, there's one, but there's a 3.5 down here. I'm going to take the smaller balance. Is that smaller? No, it's the same one. So we're going to take this one first. Doesn't matter, whichever one you don't like. We're at 46. This one was 3.3. Yeah. So you can see we achieved our goal with bringing the fewest of dollars to closing to pay off debt. We need $7,360 to pay off in order to get our debt ratios down below 45%. So that's what a lender's going to do is we're going to figure out which ones you're going to bring to closing to pay off. And by the way, by the time you get to closing, these balances may be less because you're going to be making payments on those balances during your transaction. And so that's why you never want to pay off these debts ahead of time. The lender may not ever see it because they've already pulled a credit report and they already have their credit report in their hands. They're not going to go pull it again because you paid off some balances. We want to first figure out which ones are most effective to improve your debt ratio, and we're trying to get to your debt ratio down to a certain figure. And this is why I want to encourage you not to pay off your debt ahead of time before talking with a lender, finding out which balances you should be paying off to most improve your debt ratio and improve the chances of being approved for a mortgage. I hope that helped you. We'll talk to you soon.